So you're a homeowner, right? Chances are you've built up a good chunk of value in your property. That's awesome. But how do you actually get your hands on that cash when you need it? Well, today we're going to break down two very different ways you can do exactly that.
You know, you've been paying down that mortgage for years, and that equity you built, that's one of your biggest financial assets, for sure. So what happens when life happens? You need a chunk of cash for a big home renovation, or maybe college tuition is looming, or you just want to get rid of some high-interest debt. How do you tap into that value you've worked so hard for?
Okay, so for a lot of homeowners, the go-to answer is a HELOC. You've probably heard of it, a home equity line of credit. The easiest way to think about it is like a credit card that's backed by your house. It gives you this line of credit you can dip into whenever you need to. But, and this is key, it's basically a second loan that sits on top of the mortgage you already have.
But here's the thing about that very common path. There's a catch, a hidden risk. See, while a HELOC seems super flexible, it can be a real headache when it comes to financial stability. And it's one of those details that can cause a ton of stress later on if you're not ready for it. All right, so here's the main problem with a HELOC. Your monthly payments can be all over the place. Most of them have what's called a variable interest rate, which means your payment can, go up or down depending on what the market's doing. And let me tell you, when interest rates are climbing, that kind of unpredictability can be a huge source of anxiety. So, what's the other option? What's the more stable choice here?
And this is where things get really interesting. We're seeing a big shift, with more and more homeowners looking for what's being called a more responsible way to access cash. It really all comes down to one thing: wanting more stability and more control over their money.
And that alternative? It's called a cash-out refinance. Now, the biggest difference here, and you really got to get this, is that it lets you tap into your home's equity without getting a second mortgage. You're not adding another loan on top of your old one. You're actually just replacing the one you already have.
So how exactly does that work? Well, there are two huge differences to remember. First, like we said, it is not a second loan. It completely replaces your current mortgage. Let's paint a picture. Say you owe $200,000 on a house that's worth $400,000. You could refinance for a new loan of, say, $250,000. That new loan pays off your old mortgage, and boom, you get $50,000 in cash. One home, one mortgage payment. And the second difference, this one is absolutely crucial, is that you almost always get a fixed interest rate. And that fixed rate, that is the absolute game changer. It means your payment, your principal and interest, is locked in. It's not going anywhere for the entire life of the loan. No surprises. You're not going to wake up one morning and find out your payment suddenly shot up because of something happening in the market. It's about predictability. It's about that peace of mind.
So when you put them side by side, the choice becomes pretty clear, right? On one hand, you've got the HELOC, which can feel like a financial roller coaster with those up and down payments. But on the other hand, you have the cash-out refinance, which is more like an anchor. It gives you that rock-solid, predictable payment every single month. I mean, for anyone who likes to sleep at night, the advantage here is huge.
All right, so let's boil this all down. What's the big takeaway here? First, a cash-out refi is a really powerful alternative to a HELOC. Why? Because it replaces your current mortgage. It doesn't just add a second loan. And maybe most importantly, that fixed interest rate gives you total payment stability. You just don't have to worry about your payments jumping all over the place. So, at the end of the day, it really all comes down to you and your financial future. When you need to access that equity in your home, which path makes more sense for you? Are you looking for the flexibility that comes with a HELOC, or do you crave the stability of a cash-out refinance? The important thing is, now you know you have another really powerful option to think about.